Hey everyone, Dan here. We are just before market close on Thursday, June 17th. We're going to do our daily update of SoFi. Before we get into it, if you enjoy these videos, please hit the like and subscribe button. It helps a lot. And feel free to comment below with your own thoughts, questions, ideas, or tickers that you would like to see me cover. All right, so SoFi continues to have another great day today after having a great day yesterday. And if we see a common thread here, it's that the volume is well above the average volume. Over 1.5 times average volume means there's a lot of nice buying pressure coming in, and we're reaping the benefits at the moment. This, even though there have been shorts coming back in, ready to play ball again. Yesterday, with the run-up that we saw, whatever it was, about 4% or something yesterday, we saw a bunch of shorts come in, potentially contributing to this drive down, though I don't have a huge doubt that that was also a bunch of folks taking profit. But I'll be interested to see what has happened today, now that we've gotten supports over that 2263, as long as it can be held, it gives a really good opportunity to run toward that 2361 zone. But are shorts continuing to pile in? And if so, what does that look like? We'll know more later today. Unfortunately, the 15-minute feed from Interactive Brokers is not available at the moment. This is all 616 data from yesterday. So unfortunately, but we can see yesterday and the day before, the availability from Interactive Brokers, at least, very, very low. So even though there were millions of additional shares made available when the merger happened, those quickly got gobbled up by the shorts, and supply is very, very low, keeping the fee relatively high, which is helpful. But it's interesting that just with some volume, like we were saying all through these days, just with some volume, we can get nice runs up. And these price zones we've had charted for, I guess, a couple of weeks now. We've had these charted at least since this time frame, and so this was on the 2nd of June, so right after the merger happened. These price targets have held up really, really well. You look where they keep continuing to bounce off. Obviously, this is making higher lows, so it's not needing to stretch down to that 2121 anymore, which is great, but consolidating and gaining support around that 22 zone, then making a run up, ultimately getting support at that 2263, but even dropping down. And this is like a prime example of how to dip buy into price strength, the thing that I've been harping on for a long time. So say you didn't have a SoFi position today. Let's say your hypothesis was, okay, if this can make a run over 22, then I feel pretty good, or maybe over 22.5 or something like that. I feel pretty good that there's significant price strength in SoFi that I'd be comfortable taking a position again, since it's had that big sell-off from 25. So you would have seen it run up. You have seen it get over your target, over 22.5, and then you're waiting for it to pull back. So maybe it pulled back, and maybe you thought about, or maybe you did take an entry here, though you wouldn't have seen price strength at that point. Instead, you came down here, you see this big green candle appear at this support zone. That would have been your big indication to buy in. It rode up over your sort of limits that you were looking for it to break, and then you wait for it to pull back to the next support level and show some strength, and then you buy that strength. But you're buying it on a dip because it's lower than the high that it just made, and now you're looking for it to build off of that support zone and establish new highs on higher support zones above that price. So hopefully that makes sense. But these are still the zones that I'm going to be looking at in the days ahead. Look at the 5-day view here. Nice sort of like cup forming here, working its way back up to that pre-market high the other day, and actually same as the close high, 2339. So it's looking like it wants to make another run toward there. I would be cautious because it already essentially topped out once there. So I would just, keep a really close eye on it from here to about 2340. if it makes a run there tomorrow, you really want to stretch over this zone in order to continue on. Obviously, then it's getting pretty close to bumping into that 2361, but that's different than running back up and just kind of stretching into the white box and coming back down again. That's going to be like double, triple topping out, and could, bring in some selling pressure if there seems to be a big wall at that area. But hitting that 2361 instead would probably cause it to just pull back into this white box and then make another run at gaining support at 2361. So that's what I would be looking for. On the indicator side of things, RSI, even after this nice green day, just about mid-range, so plenty of room to run up still. And on the MACD, a really recent, nice bullish crossover. Though they're running relatively in parallel, but gaining a little bit of real estate at the moment. It's not a very steep crossover, but we will have to see what it brings. I mean, it's about to close anyway, so probably not a ton that's going to happen in the meantime, but going into market close with some nice bullish momentum, I would take it. It doesn't always necessarily mean anything for the next day, but it would feel better than a big red candle at the end of the day. I did want to touch on one other thing that folks have been talking about, the lockup period. That's the wrong one. Lockup period here. So as we see, there's a bunch of folks wondering what's going to happen when the lockup period ends. Folks are saying they're seeing that that's coming at the end of the month. Basically, what we see here in the SEC filing is, closing date and ending on the earlier of 180 days. So it's not going to be 180 days from the merger. For 33% of the lockup shares held by the holders, blah, 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 blah. Common stock equals or exceeds $12.50 per share, or adjusted, for any 20 trading days within a 30 trading day period. So we could just look at that as the month of June for 20 trading days within a 30 trading day period. So we won't hit 30 trading days because June itself only has 30 days, and we know that we don't trade on every day. The question I have, which it doesn't seem to super clearly spell it here, though I would assume that this would trigger it, is if you just have 20 days in a row, 20 trading days in a row, do you still have to wait till that 30th day before the lockup period ends? I would think not, but it doesn't seem to explicitly say that here from what I can tell. If there's a lawyer or someone who's super well versed at parsing these things out, feel free to drop a comment below to help everyone out. But it would look to me as though if you hit 20 trading days in a row, you're not going to dip below that by the time you reach 30 days, obviously. So if that were the case, we look for 20 trading days, and obviously it's been above 1250 the entire time. So we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, which means we have 7 more trading days to go before we were to get to that. So that means we have the 18th, 21st, 22nd, 23rd, 24th, so right at the end of June would allow for 20 consecutive trading days. Though I don't think it says it has to be consecutive, but it would be consecutive. Would be 20 trading days that would have been accomplished. So that would have been sufficient to free up, I believe, 33% of the lockup shares. So for an additional 50% of the lockup shares, totaling aggregate of 83%, obviously 50 plus 33, permitted on the date which the last reported acquire, blah, 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 exceeds $15 per share for 20 trading days. So this would also be covered in all of these days. This was over $15 every single day. Yep. And why can't I keep getting lost here? $15, blah, 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 blah. And so that would free up those 83% of shares that are locked up. So yeah, that could potentially bring a flood of sells onto the market. But the question is, like, are the holders of these shares that are locked up like really happy to take, big like portions of their positions and sell them? I mean, even then, folks that have shares locked up might have like a fraction of a percent of, well, I'm sure the vast majority have a fraction of a percent of all of the shares that are being held. So even if a bunch of folks, say employees that had stock options in SoFi when they joined it as a startup, and those have since been converted to the extent to which that they've then been locked up, they probably cumulatively have a very small percentage of the company. These are primarily going to be held by, the PIPE situation, the IPOE situation, the founders of the company, the executives, the investors. So the question is, like, to what extent will those folks, like that portion of the folks that are subject to the lockup period, will they really be executing big block sells at this trading price? I don't know, but I don't feel that that's the most likely situation. It could be, and we'll just have to see. Obviously, if you hear any additional news or even rumors, there's sort of limited info to go on at this point. So any info is helpful, and feel free to drop that in the comments below if you have it. Definitely help everyone out. But I would kind of feel that for folks who did put up money at $10 and now it's well over twice that, sure, I could see them selling a significant amount of shares. But to me, the likelihood of the executives and the founders, dumping a bunch of huge blocks of shares onto the market at this, early stage in the game, seems unlikely, but obviously you never know. It just seems unlikely, but definitely don't take that as meaning anything. This is just from me, having watched several of these and having myself been a part of startups that have gone public, and seeing what people do during those time frames. So take it with a huge grain of salt. It's just a guess, but we'll definitely see how it plays out. I think the big sort of not monkey wrench in this, but the big question mark for me is, being that it wasn't a traditional IPO, that it was a SPAC deal, how much does that change the equation with a bunch of the IPOE holders being very, very happy taking this 2x or more profit that they have at the current share price and running with it. So I do think that the lockup ending on that date is quite likely, for at least like that 83% threshold, and we'll have to see what happens on those dates toward the end of the month. But in the meantime, we have a few nice green days to be building off of, and definitely analysts starting to be on our side as well. By our, I mean any of the SoFi bulls out there. All right, well, thanks a bunch for watching. I appreciate it. I hope your trading week ends with a bang. I will see you in the next video.